In the last 3 years, the rental market has taken property managers for a ride. Renters moving out of the city and then back in, shifting demographics across rental properties, inflation, rising mortgage rates, you name it, it's happened. These back and forth shifts may have you thinking about your long-term plan. You may be considering buying another property management company and expanding your reach into new markets, or simply getting out of the business altogether. On the other hand, you may just want to know the value of your company so you're ready for sudden market changes. Wherever you're at, we've got you covered with some recommendations to help you value a company, whether it's yours or someone else's, and how to acquire or hand off a property management business. Let's start with how to value a property management company. Whether you're buying or selling, knowing the value of what's in front of you will help you shop around for the best deal. If you're buying, there are a few ways to determine the value. Take the income approach and look at top-line revenue, cash flow, even future earnings. The business potential for tomorrow is as important as how it's performing today. Another is the cost-driven approach, where you look at the company's assets. Simply, what is the book value? How much would it cost to replace or reproduce these assets? And finally, there's a market approach. This is where you look at comparable companies. What are they valued at? There may even be a recent purchase or purchases that give you a benchmark or show you trends, much like buying real estate. The market approach also works when you're selling. Looking for similar transactions or having multiple offers on the table will tell you what people are willing to pay. Having an approach to buying or selling a property management company is only the first part. Breaking out the books and diving into the actual numbers is where the rubber really meets the road. So let's cover that next. Take time to tally up the assets. This is everything the company owns, tangible and intangible. The building people work in, the laptops from customer service, tools and equipment from an in-house maintenance team, of course, any properties it has on the books. And don't forget about its website, media library, and social media accounts. Those fans and followers have value. And yes, this includes sites like TikTok. But don't worry, this doesn't mean that you'll have to video your dance moves. Is the company turning a profit? If so, how? Find the areas of the business that generate the most revenue and calculate profit margin. If it's low, dig into why. This could be a red flag, or there could be untapped growth opportunities, which leads us to our next step. Is the company in a high growth area for rentals, or has the market stagnated because of new opportunities? Maybe it's oversaturated with competitors, which doesn't necessarily mean new opportunities have all been tapped. Size up the market and look for gaps in services. Could you offer something new, do it better, or run it more efficiently? For example, adding fees for convenient add-on services. It's one way you can grow the company financially. And pro tip, look for your municipality's comprehensive annual financial report, CAFR, to identify areas that are heating up due to new development projects or other factors that can influence the health of the local rental market. Debt-to-income ratio allows you to compare the amount of money coming into a company against the amount of money they owe. A good debt-to-income ratio is about 35%. Businesses with anything higher could be carrying too much debt, which makes it hard to find a lender should you need one. But don't forget to look at the reason for a higher debt-to-income ratio. If you're taking on debt to expand your business, that's a completely different story than debt you opted for to help cover a cash flow shortfall. Look at the cost the company has on a monthly or yearly basis. Office and equipment rentals, software licensing fees, staff costs, all of these contribute to overhead. If a company looks like they're carrying around a lot of overhead, it's not necessarily a deal breaker though. There could be an opportunity to cut overhead expenses, save money, and really run the business better. Measure your company or the company you're interested in against industry standards for your market, as well as against competitors. You can track that on your own, compare your portfolio to reputable sources of data, or you can use property management software. Buildium's Analytics and Insights, for example, gives you leasing benchmarks for your specific rental market and business size. We'll drop a link in the description. Now that you're ready to go through with it, you're in the home stretch. Transferring ownership requires a lot of planning and paperwork, legal paperwork, like disclosures and sales agreements. Hiring someone with experience and expertise can make sure that everything goes smoothly and legally. They can also help with succession planning. Selling or buying is not just about handing over the keys. Both parties need to think about making a smooth transition of ownership. Letting your owners know that you're selling depends on your relationship with them. If you're only just starting to think about selling, but haven't put any wheels into motion, you should likely hold off. Further along in the process, when you have interested parties and it's a sure thing, you'll want to let them know. Keep them in the loop throughout the entire process so they don't feel like they're completely in the dark, but there's no need to over-communicate.
You may scare them.
The next few years may see big changes for your journey as a property management company, or they may not. But whether you decide to buy, sell, or remain where you are, it's critical to know the value of what's in front of you. And if you've decided to make the jump into a new market by acquiring another property management business, check out All Property Management. which connects your business to property owners looking for property managers like you. It can be a way to get ramped up with new business and break even on your investment even faster. Hopefully, these tips will help you along that journey. And for more advice, be sure to check out the links in the description, as well as our library of videos. And don't forget to subscribe to our channel. Thanks for watching.